Hello and welcome to Your Money Matters podcast. I'm delighted to welcome three guests who know a lot about the world and quite a bit about finance. So it would seem, anyway, if you believe what you read on the internet. But warm welcomes extended to Baroness Susan Kramer, who's the Treasury spokesman for the Liberal Democrats in the House of Lords. David Buik, market commentator for Panmure Gordon, and last, and I suppose in this case probably least, because you have to put your guests first, Nicola Horlick, CEO of Money&Co, the site you're visiting to listen to our words of wit and wisdom, he said. Don't hold me to that one necessarily. Right, so let's kick off with out with the old, in with the new. 2017 is drawing to an end. I haven't noticed any major nuclear explosions in the Middle East yet. I'm just wondering what your take on where the world is going in politics, economics, systemic risk, just a general view of where you think we might be going. David.
Well, I'm a lot older than anybody else around the table. I don't mind admitting that, and probably since Suez in 1956, when I was almost compos mentis, I think I've known a year like it. And with the year that has had so much turmoil, starting with the first round of Twitter from President Donald J. Trump, with complete turmoil over the worst election campaign in living memory, which left the government without a majority, with Jeremy Corbyn against all the odds, putting himself down very, very firmly as leader of the left-wing Labour Party, with Kim Jong-un going mad in North Korea, and with considerable unrest in the Middle East, particularly my concern is Iran against Israel, to find that the Dow is up 40% or near enough since Trump became president 13 months ago, for the DAX to be up 14% when her ladyship, Frau Merkel, all but make a mess of her own election, for the French CAC to be up 11%, and well done. I think if I had to award somebody of Politician of the Year, it would probably be Emmanuel Macron. I think he's done an incredible job against all the odds. Everybody thought he'd get trashed by the unions, and he hasn't. And against that, the FTSE, of course, as we know, is only up 5.5%. Because it's been a foreign exchange play. We made all our profit in the FTSE in 2016 when the pound fell 17% against the dollar and about 14% against the euro. The balance has been redressed, and we've had underperforming sectors like retail and various other things. It means we're only up 5.5%. Hong Kong up 33%, and only a miserly 6% for Shanghai. And this comes against background of complete and utter turmoil, because growth is quite good everywhere, apart from the United Kingdom, which is caused by uncertainty, where we've had several politicians and people like the IMF with the most enormous wooden spoons stirring it up. But you would say that. I would say that, wouldn't I, as being a Brexiteer? And the outlook for, and I'm going to keep quiet a minute, and the outlook for 2018 is bright. Unless we get the political upheavals, which Lady Kramer will be able to say, which we do not need, which is something like North Korea behaving badly and Trump responding in an irresponsible manner.
What do you see as the drivers of growth, David, in terms of, let's confine ourselves for the moment, that's fascinating me, thank you. Let's confine ourselves to the UK for the moment. What do you see as the drivers of any potential growth in the UK and sectorally, given that Money&Co does actually cater for small and medium-sized enterprises? What do you think the prospects for SMEs are in the UK?
Better than ever. And I think not only businesses like your own, but also the fact that Lady Kramer can evaluate on because she's partly responsible for it, is the government is committed to awarding 33% public sector spending towards SMEs, which is up, I think, from about 10% in 2010. And that, to me, is very exciting because I work for a stockbroker that is only interested in SMEs. And, you know, our prowess is to put everything together, whether it's debt management, IPO, finance, everything, corporate finance, investment banking, the whole lot. And we have a queue of people desperate to push on. And I think this is terribly exciting. I think business is a cartel. I think it's wedded to the European Union. I think it's desperately unhappy with what it sees at the moment. Fortunately, by the grace of God, it's not the greatest employer that we've got in this country at the moment. 60%, as we know, of the FTSE 100 earnings is dollar related. And therefore, it's the growth in this country, and I hope you invite me again in a year's time, because I shall smile like a Cheshire cat, because it won't be 1.6%, it'll be over 2%. And it'll come from SMEs, and it will not come from the big companies.
Well, there's a man nailing his colours to the mast. That's something I love. Baroness Kramer, just again a two-tier question. I think that probably works reasonably well. The global overview, and then, so far as your views of the prospects for the small and medium-sized UK.
Well, if I can just pick up on a couple of things that David said. I mean, you would expect the FTSE and others to be doing well when we've basically had such a collapse in the value of the pound. So all of their overseas earnings suddenly shoot up in pound terms, and it doesn't seem to me there's any growth that's in the indices that is attributable to anything else other than that. But then we've got the low growth. I mean, it's a miracle to have a low growth forecast in this particular environment when every single one of our trading partners and investment sources is looking at, an economy that's essentially on fire, that it's doing so well. We are absolutely struggling with the worst growth forecast in the developed world, and we've done it to ourselves with Brexit. So Brexit, I think, counts for this, the fact that there seems to be this split response, and none of it to me bodes any particular good. Look, what I worry about is the really fundamental divisiveness that seems to have taken over so much of our society. I mean, wherever you stand in politics, people seem to have become entrenched in very different views and very different positions, and with it goes a sort of populism, a nationalism, under the cover of some of that, a creeping authoritarianism. And if you're even just looking at business over the long term, that is essentially, I believe, not good news. It doesn't lead to free trade, it doesn't lead to creative new business opportunity, it leads to oligarchs, it leads to monopoly, it leads to all kinds of distortions
So you're saying
of the market. So that worries me, that fundamental problem that seems to underlie so much of what has happened, quite surprisingly.
So so you're seeing a genuine crossover here between the quality of political discourse and the ability to operate efficiently economically.
I mean, I think it has to be true. I think many businesses just put their heads, under the parapet. They don't want to get involved in a political fight. They don't even want to have the political views expressed. They might talk to governments, but it's very much in private, and it's always very sugar-coated because the potential for retaliation is significant. So it's a very strange kind of discourse, but a lot of companies that I talk to are in the mode of what can I do that best serves my shareholders and my customers. They are very detached from geography. So I think there's quite an interesting set of changes that are probably been underway for a long period of time, but becoming more and more accented. And even small businesses, it used to be you talked to small business, they thought of their markets as being very local. But many of them now recognise they're in a very long supply chain, which ultimately has some export or some international element to it. And that there are going to be repercussions. They haven't a clue what they are. They don't have the resource to try and work it out. They don't have the resource to do very much about it. So they're going to work from day to day, tomorrow and next week, try and do the best that they can. But I find a great deal of sense of concern over what is going to happen in the long term. And in the end, it does come back, I think, to that underlying political turmoil.
Okay, let's drill down just a little bit on the. Let's go back to our unfortunate sort of small business that's operating with its blinkers and and dimly aware of its supply chain.
But I don't want that to sound, as this is putting down small businesses. If you're a small business, the resource that you've got that lets you manage your day-to-day, which is sufficiently challenging, without being able to do vast, long-term analysis. You can't afford contingency and insurance in all kinds of ways that a big player can. So I don't think it's that people are, being foolish in any way or being stupid in any way. I just believe they're in a position where their ability to try and manage a particular situation with so much uncertainty is very limited.
Well, the government's clearly on board, isn't it? It's trying hard, and no one doubts the good intentions of which may or may not be paving the way to hell. But the British Business Bank and the various schemes to promote lending, to sort of attach electrodes to sensitive bits of the banks to get them to channel more funds into small and medium-sized enterprises. So that's something, isn't it, that we really need to look at?
Well, I think it's crucial that government made the change, and there's obviously some of my colleagues very involved in it. Vince Cable being a good example of both creating the British Business Bank but giving it that mandate to focus on small businesses and to do a lot of it via the new alternative lending platforms, using alternate finance as the mechanism to get to that rather neglected sector, which always seems to be the first to be starved. So by our regular high street banks. So I think that has been invariably good, very important and very crucial. And small businesses are the absolute backbone of our economy. Yeah. But we struggle with two kinds of small business. There are the small businesses who frankly always want to stay small, and they are crucially important to our communities. And I think they still struggle to be able to attract sometimes the financing, the support, the training that they want. If you want to look for low productivity, it does tend to be clustered in those particular firms because their capacity to take on innovation and make change, is just much more uphill. And then you've got the ones that are starting small, but my goodness, they're ambitious. They're driven, they tend to be in the innovative tech sectors, they might be financial technology or a whole range, life sciences, a whole range of others. And they're a very different kettle of fish. And with those, we're very good at startup, but even with the British Business Bank, scale-up remains an ongoing problem. And hopefully the alternate finance will begin to move into that scale-up arena, because that really is becoming very acute as a problem.
Brilliant. Well, thank you for that. There's lots to come back to, I think, on that. But for the moment, Nicola, would you offer us your worldview and then drill down a little bit into the detail on the prospects for small and medium-sized business?
Yes. So David was pointing out that equity markets have been very strong during the course of this year, with the UK lagging, but still overall there are positive returns for equity investors. And if you actually look at valuations of equity markets, they all look very, very expensive and therefore rather dangerous. And if you also look at the fixed income markets, they also look rather expensive and a bit dangerous. So it's very difficult, therefore, for people to know where to put their money. And if you then look at the reasons why this has happened, as far as the Trump thing is concerned in the US, there are two factors there. One is that actually company earnings have come in higher than expected, and that's the main driver to stock markets, because people are very focused, institutional investors, on the forecasts and how companies do against those forecasts. So if companies come in with earnings that are better than expected, you tend to end up with a higher share price. But you also had Trump's promise about reducing corporate taxation, and the way that institutional fund managers look at earnings is post-tax. So if tax reduces, that means that the net earnings are higher, which therefore means that you're likely to end up with share prices going up. So it's that policy and a combination of that and higher earnings, particularly from the new tech sector, the newer, the gig economy, that it has resulted in this very sharp increase in prices in the US stock market. If you look at Europe, it was very predictable, I think, that share prices would rise in Europe this year, because if you print money, that's what happens. It's got to go somewhere. It goes into equities, it goes into property.
They were late on the scene as well, weren't they?
Yeah, so, and this is the big conundrum what happens when you stop printing money, and how do you unwind the position? So in the US, they're beginning to start trying to increase rates and unwind it, but no one knows, because we're in uncharted territory and this has never happened before. Nobody actually knows what's going to happen. They saved the day, seemingly, in 2008 by printing money, lowering rates to abnormally low levels, but what's the end game? So that creates a big risk for investors, and that's actually a good reason for an investor to think about investing in loans that we have on our site at Money&Co, because whatever happens to stock markets, it's not going to affect what happens to those loans. We're investing in companies that have a strong future, that are profitable, that have strong cash flow, that can afford to have these loans, and we're helping them to grow their businesses, and they're miles away from these very highly valued companies in America or Europe. So that's the first point I wanted to make. In terms of the UK economy, I don't think that it's going to do terribly well. I disagree with David. I think the problem is that we are seeing a massive squeeze on individual household incomes, because inflation has gone up because of sterling falling, and we import so much in this country, and wages are not keeping pace, and as a result people are feeling the squeeze, and you're beginning to hear things coming out of retailers about things are getting tougher, and you've seen that reflected in share prices. And yeah, I think therefore it means it's going to be harder for us to grow. I mean, there are some positives, like, it's great if more government contracts are going to be given to smaller businesses, and things like that are happening, and also companies are being told that they have to pay their suppliers who are smaller businesses faster, and all those sorts of things help smaller businesses. But the truth of the matter is that the underlying economic environment isn't looking particularly rosy in the UK, and that's why you've got so many people forecasting that it's going to be tougher here. So I think that is self-inflicted. It is to do with Brexit, and it's a bit of a shame, but that's where we are.
Well, I'm sure we'll get to Brexit in detail sometime later. Let me just ask then one final round of questions for this segment of the podcast. If you could implement, I'll start with Nicola, and then go around the table. Nicola, if you could have one a magic wand, the power of the autocrat, and implement one structural change, what would you do? Or do you think, or are we dealing, it's the old Chicago economist joke, how many Chicago economists does it take to change a light bulb? Answer, none, because if the light bulb needed changing, the market would already have done it. In other words, would you like to see, what major structural reform would you like if you were granted one, or will the market take care of it?
No, I think in this country we've done some really good things to support smaller businesses. As Susan said, the British Business Bank, having peer-to-peer platforms that will lend money to smaller businesses, lower rates of tax, all of these things are extremely helpful, and as everybody has rightly said, small companies are vital to the future of our economy, because 90% of people are actually employed by small businesses, not large businesses. Most of us, when we think about our friends and who they work for smaller businesses, not for Shell or BP. So the truth of the matter is that we need to support those companies. We need to give them the opportunity to find finance. And I think we've done a lot of the right things. The other thing that we have here in this country is the Enterprise Investment Scheme, which encourages wealthier individuals to invest in smaller businesses, and in return they get tax relief. So I don't think there are structural changes that need to be made. I think one thing we have to remember is we do live in a world which is more one these days. This is, in my view, why we have Brexit and why we have Trump. It's all about globalisation, and that is a very difficult thing to tackle if you're a government. We
will get to that. We will get to that in a separate podcast. But thank you for that, Nicola. David, is there anything that needs fixing, or will the market take care of it? I'm thinking specifically of the small and medium companies, and what the alternative finance industry, of which Money&Co we hope is an important part, should do.
I think probably what I'd like to see is even more tax relief for people who are prepared to invest in small businesses. If you wanted me to select one thing.
So that's the equity side, the EIS side, yeah.
That would, I thought Philip Hammond ought to have done that in the last budget. I mean, he played it safe, got away with it. But I mean, when you consider the kind of derisive things that were suggested on housing in terms of the amount of money, which was ridiculous, pathetic, He ought to really been bold about this, because he's an accountant. He knows exactly what the situation is, that companies, small companies, which your firm does so well in trying to help out, and other people do in their peer-to-peer lending and the other areas of finance, they need every kind of assistance to be given, in my opinion, the confidence to, for want of a better expression, to be gung-ho, fixed bayonet and over the top. And therefore you really need that to happen above everything else.
Very good, thank you. Rare and charming compliment from an arch lever in favour of the arch remainer, Philip Hammond there. He knows what he's doing. Gosh, we'd write that one down and see what you say about it in a year's time, David. So, Baroness Kramer.
Well, I suppose I'm struggling to choose one thing, so I'm going to try and be slightly sneaky and choose one thing that lets me say two. But it's those small businesses that don't have the ambition to be the next global leader that really concern me. Both their slow pace of adapting to new productivity and also filling in gaps, because housing, I mean, if we don't get new small builders to working with local councils, building something called, don't call it council housing because that upsets everybody, but the equivalent, genuinely affordable and social housing, so we are going to have a real, this crisis is coming on and it's a very serious one. But I think if government would start focusing its energy on that group. So if you look at the sort of measures it's put in place to encourage faster productivity, they're targeted at big companies and medium-sized companies. Excuse me? That's not where our problem is. Our problem is down with very small companies who need support to be able to make those breakthroughs in using new technology, new approaches, new methods, etc., to build that productivity up. And indeed, one of the problems for small builders is they tend to be unbelievably inefficient because they're very traditional. And if you could again get those new methods of working, those new approaches, new construction formats into companies that could then provide that challenge to the big, I think, 8 that sort of dominate and choke the entire housing market, I think those two things would make a very big difference.
So actually what you're talking about is more investment, small companies investing. And I think the only way that you can really get them to do that is to provide better tax incentives.
Well, I mean,
which speaks to David's
point. I don't want to poo-poo tax incentives. When I talk to small companies, it's almost that very often, though, they don't know where to turn for things. If you talk to a small company, it's not, an additional investment would let me see how I could apply to computer technology. It's I wouldn't know who to turn to, who to get advice from, who to get help.
This is a recurring theme.
And I think is the bigger gap.
Could I interject here?
Money never hurts because it lubricates everything.
Yeah, I completely agree with Lady Kramer, but I want to just say something. It's a real hobby horse of mine. Is that the way the banking system now is, I've been at a bank, I've been keep quiet for 25 years. I couldn't tell you the name of my bank manager because I'm just the sort of client he doesn't want, because I have no debt, no mortgage. I'm older than God. The money goes in, the money goes out, the books are balanced. But most people I know are on these wretched phones or this laptop, internet banking. This is wrong. Big time wrong, because how can you possibly assess somebody for his business plan if you don't see the whites of his eyes? So the idea that I go to Barclays Bank, sorry Barclays, no offence, Stephen Bumston, my ridiculous thing.
Cat is out of the bag, one and truly.
No, it's not. But and how can I make widgets in Wisbeach? And he says, well, I'll send your application to Norwich. No, you tell me about it. And if banks are going to be slightly less profitable on the domestic side, for the sake of the overall growth of the country, so be it.
Yeah, I may have found an ally for community banking, which I think is absolutely critical. Where frankly, the problem is not that they can't make money, it's that if you have the sort of overhead that a massive investment bank has, that then you go and deal with a little tiny client. Of course, that's not profitable. This if you're actually targeted at the small client, and actually the alternate finance world is doing that, and some of it also is extending where necessary the relationship.
But there again, there's an education there because not enough people know about it.
Well, actually, it's very interesting to look at our experience at Money&Co, because when we started lending 3.5 years ago, I assumed that we'd have very little to do with our borrowers, that they would just fill in something online, it would come through, we would analyse it, and that would be it. But actually, we then decided quite early on that we didn't like the idea of lending without meeting them. So we actually go and see them. So if somebody fills in an application online, we then call them up and say, right, we're coming to see you tomorrow. And we then go and see them. As a result of seeing them, we've then established a relationship with them. They now regularly call us up and tell us how things are going. They don't have to. There's nothing to say that they have to do that. But they like to. And we've ended up having a much closer relationship with our borrowers than I ever expected or intended. And actually, I see that as a good thing.
So it's that fundamental tension, really, between the importance of a personal relationship and what in the digital economy is and generally is known as scalability. How do you scale up personal relationships? But anyway, look, that's been a fantastic and entertaining discussion. We should draw it to a close here. I'd just like to thank all three of you, David Buik, Baroness Kramer, and Nicola, of course, for your time and your points of view. Thank you.
Thank you.
Pleasure.